2023 has been a challenging investment year. That's why now is the right time to get your portfolio ready for 2024. 2023 brought higher interest rates and raising geopolitical tensions, leading to a bifurcation of the world. The supply situation for most metals did not get any better, hence we expect strong metal prices in 2024 and an uranium bull market that gains further momentum. Let's dive in to learn more about the upcoming commodities bull market in 2024. 2023 has put nuclear energy again on the agenda of politicians and investors. Issues with reliability and costs of wind parks and solar installations have reinforced the need for a stable baseload energy contribution to the grids. At the COP28, the US, UK, France and others have agreed to triple the amount of energy generated with nuclear until 2050. This initiative is on top of already announced policy changes in countries like Sweden, which starts again to build nuclear reactors, the Japanese reactor restarts, and lifetime extensions of reactors in a lot of other countries. The Chinese nuclear build-out remains strong and will accelerate in the second half of the decade. This is supported by additional build programs announced by India and others. All of the above will lead to a stronger demand than currently projected by the World Nuclear Association. On the supply side, the first restarts are coming back into production, however most of them face delays caused by labor shortages, raising costs due to inflation, financing challenges and supply chain issues. We therefore conclude that the projections on the supply side are optimistic to say the least. Coupled with the strengthening demand picture, this lays the foundation for a very healthy uranium market in 2024 and beyond. In an environment of raising interest rates in 2023, the price of physical gold has held up remarkably well, supported by strong buying out of Asia. Due to the geopolitical tensions, we expect the Asian buying of gold to continue well into next year and, combined with a potential top in US interest rates, to lead to a significant breakout of the gold price in due time. Rising government and corporate debts, that need to be refinanced at higher and higher interest rates, are putting additional pressure on major currencies and the banking system. This raises investors' concerns in the stability of the global financial system and might trigger a potential hyperinflation later this decade due to the loss of investors' faith. All of the above will expedite the return of investors to gold again in 2024. The difficult environment for mining equities with higher interest rates and rising costs has led to record lows in valuations relative to gold. This is attracting value investors to the sector. On the corporate side, mining M&A activity is picking up, which is usually a very positive sentiment driver. A breakout in the price of gold and the expectation of potential rate cuts in the US might form the foundation of a bull run in mining equities over the next couple of years. We expect the easing of interest rates and the turnaround in battery metal prices in mid-2024, after the end of the current consolidation phase. This will lead to higher metal prices well into this decade. In uranium, the already established strong price momentum will accelerate further and lead to new all-time highs in the uranium price in 2024. In precious metals, a breakout is imminent in our opinion, which would result in new all-time highs in the price of gold against all major currencies. It is therefore the right time to initiate or increase the exposure to the commodity sector. Invest with Talk Capital Management.